So, welcome back. Episode 2 of Turn Up the Volume podcast, sponsored by Suits Me. Today I'm here with Daryl Cornelius from Drova. Drova are the headline sponsor of the CUTV Roadshow. Daryl, do you want to give an introduction to yourself, please?
Yep, g'day. I'm Daryl Cornelius. I'm the General Manager for Drova Europe.
Amazing. And Daryl, give us a bit of an introduction to Drova as a business.
Drova is a software business and has been running, funnily enough, for about 15, 20 years under a different name, but was recently, just a year ago, rebranded as Drova as we pulled it out of a bigger organisation that we sold.
Superb.
Yeah.
And in terms of the credit union sector, what made you get involved in that?
Credit unions is a passion, and it's a passion for everybody that works at credit unions, not just the people that support the credit unions. When we sell to credit unions, it is the least profitable thing that we do by a long way. But we fundamentally believe in our people at Drova, and it's the people that make the difference. And I think we respect the credit union movement and what they're doing, and we really passionately want to support that in a way that's meaningful for a software company. And software companies can't really get in the front line and help people who are struggling with the day-to-day finance, but we can help those people who are helping those people. And so I think we believe in societal change, in changing the way that this society works, and helping those people who are less fortunate than ourselves get a foothold on get in front of their finances and start to make a real difference to their lives. And I think that's really what drives our interest. And you'd need to understand more about the founders of our business, Rachel and Sam Riley, who are brother and sister, to get into the depth of why that's a motivator. But nevertheless, it's a huge motivator for us to do something that is giving back more than just making money. Just making money is a hollow existence. And I think if you can do something that's you're passionate about and support people who are less fortunate than yourselves, that really is what life is all about. And when I get to the tail end of my life, that's what I want to be doing, is helping the next generations make their lives and the lives of their children just a little bit better in a little bit of a way that we can practically do.
So I was lucky enough to meet Sam earlier today and get a bit of an insight into his journey. And, we filmed that promo video earlier, which was fantastic to do. Going back to one of the points that you made a bit earlier, give us a bit of an insight into the Credit Union Outlook report. I know firsthand the work that you guys have been doing, but it would be good to get a bit of an insight into the findings that you've found at your end.
Sure. The Credit Union Outlook report, let me start at the beginning. The Credit Union Outlook report is all about us learning more about that particular sector, about really truly understanding the things that are facing the CEOs, the board, the folks who are operating those businesses. It joins together the 15 to 20 people who contributed to that report and gives insight into the challenges that they're facing, the things that they find difficult, the opportunities that they have, the moving parts. And as they look forward for the next year, really what's the things that are troubling them. As a software business, why do we do that? Because it tells us how we have to tailor and redesign our product to really meet those needs. And that's the principal driver, is for us to be able to understand that. Having understood that, having gathered that data together, bolting it into an Outlook report brings huge value, because all of these CEOs meet each other occasionally, but the deep depth and the insight into each other's businesses and the way that they approach different elements, whether that be regulation or staffing, or how do you manage a volunteer board, and how do you motivate your staff every day when you're not the highest payer in the town. Those are things that they all grapple with, and it's, for me, interesting to see how they see the now and how they deal with the regulation that's landed on their plate, and also the challenges that they see coming forward. So the digitalisation, the changing member states, so the fact that the member profile is starting to migrate towards having memberships that really care about where they bank. They don't want to bank with the big bankers. They want to find somewhere else to go. And how do you facilitate that? Well, that's digital revolution. That's on your handset. That's that, and that brings a whole bunches of challenges. Understanding risk, use of capital. There's all of those things are huge changes in the way that their businesses work, but they'll affect societal the way that society approaches credit unions. Personally, I believe this generation A, generation Z will move to using credit unions as a first port of call when we can remove the friction of their access to a credit union. We've all got credit
Yeah,
union
of course.
accounts. So I've got a credit union saver account with Wessex, and it's a prize account. I've not yet won the prize, but
We'll get there.
we'll get there one day. One day. And enabling the next generations to be able to really access finance in a fundamentally different way, where it truly helps the membership, I think is fantastic. But it's complex and it's
Yeah.
difficult. They face a lot of challenges. And so the Outlook report really bolts together all of those elements in a logical, sequential way, taking input from a range of different CEOs. And I'd encourage people to read it. It's a great read. You could download that from the Drova website, but you could also download that from any LinkedIn. If you search us on LinkedIn, you'll find us. Find the report fairly easily.
It's funny you say that around the whole Gen Z thing.
Yeah.
The whole journey that I'm on in the credit union movement is all about engaging with that next generation. It's how do we make this amazing sector, the credit union sector, relevant to the next generation? And it's all about talking. It's real life stories. It's about speaking to the businesses like yourself that you're not in it for the money. You're in it to really help the sector, as I am. I believe in the sector massively. So it's all about how do we, tell the stories of the credit union, tell the stories of the companies that want to support it, and really just engage with that next generation and educate them. We spoke about it on the previous podcast episode. There's not enough financial education out there, and I can't really hit home hard enough about that as many times.
That's fascinating, isn't it? It's the one thing that really mystifies me, and that is why finance is not taught in school, why personal finance isn't an education in schools. And I think that's one of the areas that credit unions could make a real difference, is to start to talk to children in their classrooms about how they're going to manage their money and what are the options for growing their own businesses, and where can they borrow, and where can they borrow safely. And how can they secure their futures, and what makes good investment and what makes bad investment, and what are the things that they could avoid that will enable them to lead more stable and secure lives going forward. I think that's missing from our educational system. I think it's an opportunity for credit unions, Credit Union TV maybe,
Yeah.
to get into the schools and the education system to really, really change the way that our society approaches finance. The folks that borrow from credit unions are one layer away from the loan shark.
Yeah.
And I come from a small town in Hampshire called Havant, and Havant is, there's a few loan sharks there. You can find them knocking on doors, and it's very, very unpleasant. I borrowed from one myself in the past, and it was a terrifying experience, is about the best way I can describe it. That's where credit unions really, need to don't need, but there's an opportunity to communicate the safety that they offer in their lending and their access to money over the very real alternative, which is one layer down, and not an option anybody wants to take.
And that's what I'm trying to do is turn the kind of best kept secret. Everyone hits on about credit unions and the best kept secret. Well, that's what we want to do. Let's change that. Let's talk about it. Let's educate. One of the big things I want to do is bring the young people that work within the credit union sector, and I want them on the podcast. I want them on the roadshow talking about their credit union, because if potential members out there of a Gen Z generation see Gen Zs working within the sector and talking about how good it is, then that's going to encourage them to become members, to borrow, to save, and just learn the whole ethical side of it. I was telling a friend yesterday that they didn't fully understand the concept of a credit union. And I was like, well, to simplify it is, banks have shareholders. When they earn interest off your money, that money goes to the shareholders. credit unions have members. If you set up a savings account, you become a member. At the end of that year, if that credit union are in a financial position to give a dividend, then you as a member, if you have savings in your account, you get the reward. So it's rewarding the members, not there's no shareholders attached to it. And I think that's really, really important aspect of it.
Can I pick you up on a point there? And I think you're absolutely right. However, as a young 60-year-old myself, I consider myself to be Gen Z, just in an older, wearing an older overcoat. The one thing that credit unions, what we have to do is we have to give Scene 3 telephone access. They got to be able to get to the world with their telephone. And I think with that in mind, I think we have to remove the barriers to entry, which can be quite significant. If you open a savings account at Wessex, the lovely Janet down there will email you and call you and look after you like she's your best friend. It's a fantastic experience. But my goodness, it's clunky. If you open your Monzo account, it's done in 30 seconds and 3 clicks and a quick face photograph. It's those are those elements. So there is a barrier to that next generation adoption, and it's a very practical digital barrier, and I think we have to get to grips with that. Our job at Drova is to be able to support and help manage those significant moments in a business's life where it is going to have to take big investments, where it's going to have to change the way that it works, where it's going to have to change systems, where it's going to feel very, very different for the people that work in it, very, very different, because we're trying to make it very, very different for the people that consume or have access to their services. And I think to deny that there's a baseline, to deny that actually you should do this out of principle only, or to suggest that we should do it out of principle only, is a little I'm trying to find the words, but it's a little bit unrealistic. We need to meet them where they are.
Yeah, so building blocks, steps at a time, gradual build up. I think it's a phrase that was used when I was a bit younger, is you want to gradually build there. We can't turn the tap on and automatically there's going to be that adaptation overnight.
And that risk, managing that is where we sit. We're the layer under that. And so that's making sure that we understand, if you're going to go and make these larger shifts in your business, if you're going to run your business efficiently and effectively, you want to know what are the top 5 things that are going to trip me up, top 10 things, whatever, however you want to make your list. And how do I manage each one of those so that it's all in plain sight? How do I look across the room and I see the things that are really risky for me, and how do I manage them? And how do I engage the rest of the team at the credit union to make sure that we've all got eyes on the same things that are moving at the same time? And we're expert at that. Our expertise is enabling you to see the things that could trip you up and to enable you to manage them effectively and turn them into opportunities, not into risks. So in deploying digital systems that will give you an early warning, which will help you manage, 2 things are happening. Number 1 is you're enabling efficiency. So you're not spending less time fiddling around, looking for the risks and trying to size and scale them. You're spending more time in managing those risks and putting strategies in place to turn those risks into opportunities. That's what we do. And I think that's a hugely valuable step. But it's a step in and of itself. It's a different approach. And one of the challenges that came out of the Outlook report was simply that the volunteer boards, however well intentioned, are not risk experts. And so when we talk about changing from risk to opportunity, it's something that we need to do a good job or a better job of communicating to the volunteer boards or to even some of the professional boards, and it happens in all businesses, that they really see this risk as just this sort of negative insurance thing that we must do so that we don't trip up on the FCA, when in actual fact it's a huge enabler. And I think that's our mission, and why we partnered with CUTV, simply because we've got to get that message into the marketplace so that people can experience what it's like now and what it could be like in the future. And I think Credit Union TV has an opportunity to really make a difference in communicating that to the people that are signing up to us today. Just out of shot today is Matt, and Matt's working on bringing on board our newest customer up there from Blackpool, and we're super excited to have them join us. And this is
I
something
know
that's
Mike.
growing and growing. You know,
Yes,
Mike.
I know
Yeah,
Mike. They does a fantastic
yeah,
job.
yeah,
Like other teams across the UK, very nimble team.
yeah,
Small but such an effective
yeah,
and important job. So,
yeah,
a big advocate of what Mike and his team are
yeah,
doing up there in Blackpool for first rate. So,
yeah.
yeah, excited to hear that you're getting them on board.
How are you experiencing credit unions adopting digital technology?
Well, I suppose for me personally, I'm not really getting too involved in that side of
Mm.
things, but it's something that you talk about as conversations
Yeah,
adapt and you find out what they're doing and what they're not doing.
yeah,
We are very much focused more around the digital marketing side
right.
of things,
Hmm.
and try to take them to that next level to engage with the next generation of potential member. That's where we are mostly fully focused. Um, One of the points that you did say a minute ago, and it's interesting because I sit on the board of my own credit union. I know Capital Credit Union in
Hmm.
Edinburgh were involved. I think
Hmm.
Samantha and
They
Rory
were. Yeah, Samantha and
were
Rory.
both
Yep.
involved in the Outlook report, and CEOs across the country would delighted me saying this. But when it comes to like the risk side of things, the board are there for strategy, not necessarily the operational
Mm.
side of things. And I think that can be, sometimes a bit of a grey area with the board, sometimes maybe overstep
Mm.
and think they're involved more than other bits. So, yeah, I think around the risk side of things,
Yeah.
very much, you guys getting involved with them could really help and scale them and take them to the next level.
Hmm.
What I was going to ask though, was what were the surprises, when you were travelling around and doing the Outlook report? Was there anything that probably shocked you that was going on at the credit unions, or was a bit of a surprise that you thought, oh, I wasn't expecting that?
I think there's nothing in the report that you can say is truly surprising. I think I would talk about the distance between where they are and where they need to be digitally. That is also including the marketing
Yeah,
piece,
yeah,
the messaging, their outbound communication, the fact that they're in the community perhaps, but not as in the community. And I think that talks to the thing that I think I was most shocked about, and that is the level of staffing in these organizations is so tight. It is, there's no fat in the land here. There's no excess. When you talk about doing something differently, quite often it's the CEO that has to do that differently.
yeah. So
Mike,
many hats.
absolutely, so many hats. And I think that stress and pressure really brings more emphasis into efficiency and doing them once, doing them effectively, and not having to do them again, but also not carrying around the worry and the concern that you've missed something. Again, that's something that we facilitate. And sorry, it didn't want to sound like a rolling advert, but I think it is genuinely being efficient is one of the areas that I see is most challenging for them, because they're so lightly staffed.
Yeah.
And it was the imbalance in that, and particularly how that related to the FCA regulation. And I think we have to, through the various ABCLs, the BSAs, I think we have to find a way of regulating that is light touch for
Yeah.
credit unions, because the burden is significant. And I think that was another area that I was ponderous about,
Yeah.
was how these regulations that are designed for the larger financial institutions apply to the smaller institutions. So we have to make sure that we meet our customers where they are digitally. We have to make sure the regulation is appropriate, and then we have to really help folks understand in managing a bit how we manage a business effectively and cheaply and as low cost as possible. I think those are things that we could really do, make differences with the
Yeah,
credit
and I think
unions.
following on from the point that you've made there
Mm.
around, I like to describe the credit union sector as a bit of a sleeping giant.
Mm.
I was explaining it to a friend recently about there's only 3%
Mm.
penetration in the UK.
Mm.
What that means is 3% of adults
Mm.
hold a credit union
Mm.
membership in the UK.
Mm.
It's slightly higher in Scotland. I think we
Mm.
maybe got around about 8%.
Mm.
But you look across to Ireland, 75% penetration rate. So
Mm.
75% of adults hold a credit union account
Mm.
in Ireland. I think that's so powerful. So what are the
Mm.
learnings that we can take from there bring to the UK
Mm.
and really amplify, the workings that they've got and the learnings.
You make a really good point, and I think those learnings also follow from the States as well. We've been doing some business in the States, and in Australia, and they're mortgages.
Yeah,
They are checking accounts. They're access to daily banking, which I think is also important, and another time horizon for us to really get to. I think, to me, the community needs to really play through, and I mean the community of credit unions
yeah,
throughout the British Isles, and I think that the goal of or having facilities like Credit Union TV that connect us all together in a real time, real communication, modern way is part of that. It's part of the next generation of growth for us, because we have to group together to be able to make enough noise, I
yeah,
think. And with credit unions, we've made a bet on all of them.
yeah,
Our bet is that we can get enough of them to make a sense to them and to us, so that it is sustainable financially.
hmm,
And I think that's a characteristic for all of us. It's about being financially sustainable and being in a good managed position. So we're well on our way to nearly double
yeah,
digits, and we're really quite excited about the sector. And we think that it'll come in time. We're not impatient, but I think the challenge for us is to be able to see that one voice really amplified and magnified, so that the movement is moving in the same direction at the same time. It's not unlike a tug of war and getting everybody to pull on the same rope at the same time. But to do that, they've got to agree amongst themselves what are the 3 or 4 things that really matter, that they should all go and do, and ensure that not only credit unions are going to go and do these 4 things in the next 3 years,
yeah,
that the people that are supporting them, us,
hmm,
Drova, are supporting them to achieve those objectives, getting the whole thing lined up. You really see movement when everything lines up.
yeah. And it's a similar model to mine,
Mm,
in terms of, it's bottom of the barrel pricing,
mm.
but
Yeah.
part of what I want to do is, whilst I'm on the roadshow, for
Mm.
example, I've got 40 credit unions
Mm.
signed up to the roadshow, which is
Wow.
great news for you guys as headline
Yeah.
sponsor. But as part of that roadshow, it's not the Liam Boyle show, it's not the CUTV show.
Mm.
We're just there to facilitate the credit union.
Mm.
But what we want to do is for them to tell their story and
Mm.
educate people. But whilst I'm there, I want to try and educate them. So can I show them something that they can use? That they can use for their own social media, that they can take over that responsibility, so
Mm.
that they're not relying on, an external company, or they need to outsource, because
Mm.
that all costs money. Can they, train within? And that's one of the big pictures that I've got moving for the future. And it just kind of reminded me of that when you were talking about your pricing model, etc. We're on a similar journey.
How does Credit Union TV consolidate all of the messaging to get to the people that are consuming?
So we put everyone through a bit of a fact find. So
Yeah.
when we bring a new credit union on, it's not a one size fits all.
Yeah.
So it needs to be specific to them, their
Yeah.
membership. So for
Mm.
example, use First Rate, for
Mm.
example,
Mhm.
their BA systems. So
Mm.
they're an employer based
Mm.
credit union.
Mm.
So what I would post for a community credit union wouldn't be relevant for someone like Mike and
Mm.
his team, because they are
Mm.
going specifically after
Mm.
the employees of BA systems.
Mhm.
I've got another one, SCVO Credit
Mhm.
Union, who work within the third sector.
Mhm.
So they are then trying to grab the attention of people
Mm.
that work in care,
Mm.
charities, etc. So that content needs to be relevant to them. So it's not like you plug into CUTV and everyone gets the same content, although we do a Monday message where it's the same image, the same caption, to try and create that viral effect. But we sit down with each of the clients. We'll do, whether it's on Teams or face to face once we get to the roadshow, and we'll take them through, what's relevant to them, what's their voice, what's their branding if they have it. Some of them don't have a voice because they don't post on social media. So it's all about then trying to say, well, what do you want your voice to be? Let's work on that together. Let's create content and let's push that out so that we can attract more of those people. Because some of them don't know what their ideal member looks like. You know, they might have an idea, well, it's a female at this age demographic, but they don't know then how to go and get more of them. So part of what we do is we'll show them some techniques around maybe some Facebook Marketplace stuff. We'll show them how to grow their LinkedIn channels organically. We'll teach them some techniques around Instagram. You know, these things don't cost money, they cost time. But if we can educate them, when we leave, you know, they've got a little bit more knowledge that they can kick on. They're not relying on CUTV. They've then trained within, and that's really what we want to capture.
If you were to build an Outlook report for CUTV from a marketing point of view, what do you think the themes would be that face the majority of the credit union?
I think the biggest theme would be that some are not posting at all. You know, some are posting, but it tends to be generic information. So you mentioned the loan sharks earlier. They'll share a lot of that content. They'll share, you know, if it's savings week content, they're then just regurgitating, if I can spit that word out, they're regurgitating content that's already been created. So it's not necessarily specific to their credit union, doesn't have their branding on it. I like the content we create, we want to make it more emotive because we want to hit, especially around the Gen Z, we feel that emotive content will regulate with them and resonate with them a lot better. So we're trying to create that emotive to say, this is who we are, this is what we do, and this is why you should become a member. That is really the strong message that we are getting out. But to answer your original question, the main theme would be they're either not posting at all, or they're posting infrequently, and they're not across all the social channels. So that includes Facebook, Instagram, TikTok, LinkedIn, because different members will be on different platforms, and it's just about being consistent.
I think that's what I noticed when I'm with Wessex. Come on, Wessex, post on Portsmouth Facebook page. I very, very rarely see them, and if I wasn't part of this movement, then I think in a small way, then I would not necessarily know they were there. And I think that's the big difference, or even what they stand for, or their values,
Yep.
how to communicate those values, because quite often even just on the web pages, they talk about the values, but I think we need to be able to find graphically, digitally, a way to communicate those values in a way that is impactful. And that, to me, is the bit that's missing. You can read all the text, but in a scrolling community universe, when you've got, I don't know how many seconds, you probably know better than I do.
It's like 3 seconds. You've
3
got to
seconds.
grab attention.
How do you grab that attention? How do you say this is meaningful? And I think that messaging, that impact is the point you've made, is getting that across is the challenge. And come on, Wessex, you can do it.
There's a lot of talk around sustainability and ESG. How is that coming up in your conversations?
So I'm going to define sustainability and ESG as two different subjects.
Perfect.
We think sustainability is about ensuring that a business is sustainable in the long term. The risks are managed. The funding, for example, arrears and or the loan book are both in a healthy position. So sustainability refers to the long-term stability and repeatability and growth in a business, rather than just anything that's sustainable. We talk, sustainability has been hijacked as a word, the business word, to mean I use reusable bottle tops for my milk, whatever it may well mean. And so I think we think about sustainability in those terms, in terms of making the businesses sustainable so that they're here, not just tomorrow, next week, next year, next decade, and for my kids to invest in. That's really sustainability to Drova. That's what it means to us. But ESG, in and of itself, environmental, societal governance, really as a top subject matter, the governance piece sits on its own and is largely lowered upon us from the regulators. Although good governance doesn't need a regulator to drive it. And so I think from our point of view, we're seeing those ESG subjects that people perceive ESG to be, which they mean about the environmental impact of what we do, the day-to-day consumption that we have of things that are not reusable, so plastics and so on and so forth. We see that as being subject of importance, but we see it as far more as being part of a strategy. than a particular thing, than an
Okay.
item, or do you recycle your Bic pens in the plastics box, or those are things that we need to do to be sustainable. So sustainability is a strategy, is a part of ESG is part of a sustainability strategy for the sustainability of the planet. And for the planet to be sustainable, we need sustainable businesses, and for businesses to be sustainable, they need to manage risk and turn those risks into opportunities. And those are the things that matter, I think, in terms of sustainability. ESG, it's important to us all, right?
Yeah.
We
So
should try and avoid killing planet. I think.
yeah, well, we'll try our
Yeah,
best.
good idea. Yeah.
So, in terms of everything that you guys are doing, then how does it all link back to the members of the credit unions, the people at the heart of the credit union? So, what's everything that you're doing? How does it relate back to the members? Would you say?
I think in really two very, very simple ways. Efficiently run businesses enable those businesses to reinvest in their members and their membership and the profitability of their businesses, and ensure that those funds are used for more good. So it becomes a cycle of more good, more good, more good, more good. And I think that's the impactful element of running a business efficiently. And we help businesses run efficiently through managing their risk. Linking back linking all of what we do back to the membership. Sustainable, well-run, efficient businesses means that there are more funds in that business to reinvest for the members. It also means there's no risk. The risk is reduced for those members, and the stability and the long-term future of those businesses. Their money's safe, and that's it. It's really, really simple. How does it relate to the members? If we run efficient businesses, we're able to loan more money. If we run efficient businesses, we're able to, and I don't know whether the audience would think that they're a business, but a movement or a community. But the essence is still the same. The members want to make sure that their money is safe and that it's not going to go anywhere when they're investing, and they want to be able to borrow as often as possible whenever they need it. And to do that, the business needs to be sustainable, and that's what we do.
Well, that's probably the perfect segue for the next question. So, what's next? What do you see in the horizon for the credit union movement, and what do you think's next for it?
I think they have to decide as a movement who are the businesses that they want to do business with. One of the things that came out of the Outlook report is that 62% of credit unions 80% of credit unions see third parties as the highest risk to them. And that's because they're no longer just moving paper around a desk and in a microcosm of their own. They're surrounded by people like Drova. They're surrounded by suppliers of digital front ends. They're surrounded by third parties who enable them. And I think you have to select which of the third parties are really going to share your values and principles. And if you share those values and principles, everything else can be worked out. Without businesses that aren't sharing their values and principles, then that's going to end in tears somewhere down the line. And I think that's probably the answer, as succinctly as I could give it to you.
Perfect. So, last one from me then. So, any CEOs or credit union leaders that are out there just now, what would be the message from yourself, from Drova? What would be your message to them if they're listening?
Simply that it is a big, scary subject. How do I move from spreadsheets or the way I'm managing my business now to this digital thing? It looks horrible. Come and talk to us about how we'll run an ROI study to show you how much more efficient and effective it is, and how you can turn those risks into real business opportunities that will impact your members.
Fantastic. Well, that's episode 2 done. A big thank you to Daryl, everyone at Drova, who are the headline sponsor of the CUTV Roadshow. Massive thank you to Suits Me, the headline sponsor of this podcast, Turn Up the Volume. Also a big shout out to our supporting partners in Cuto, Fern, Not the Odd One Out, Thomas Bradley & Co, Swaboda Research. Without you guys, we wouldn't be here today for the podcast. We also wouldn't have the opportunity to go and visit 40 credit unions over the coming months and share their real stories. So, big thank you to everyone watching. Thank you, Daryl.
Thank you very much.
And have a nice day. Take care.
You too. Take care.
Cheers.